Today, we have on a very special guest, Armando Gutierrez. We will be learning about trust as a wealth management structure and how to protect our crypto assets. Enjoy the show.
This is not financial advice. Please consult your financial advisor to associate the risks involved. Thank you and enjoy the show. Interested in owning your own custom metaverse? Start your new business today and offer business services such as website design, toll-free numbers, and much more. Use our next level blockchain technology in your metaverse to offer NFT, business crypto, virtual concerts, advertising space to advertisers, play-to-earn games, and virtual shopping experience. Join Kylie Jenner, Mark Cuban, and many more with your own custom metaverse today. Contact info@neuralindinginc.com or give us a call at 888-50-88298. Build business credit today for free with our free business credit, building software, and mobile app at neuralindinginc.com. Also, are you interested in adding another revenue source to your business? Apply to join our white label business credit partner program today. You can contact us at info@neuralindinginc.com or give us a call at 888-50-88298.
Hey, Mr. Armando, the floor is yours.
Easy, thank you. Thank you for the re-invite. I was, last week being our first time, it was kind of funny looking at it because it was a Friday afternoon. I was very much in happy hour mode, and I had this kind of, I think, poor man's John McAfee vibe going on. And I think maybe, although maybe I had passed on many wisdoms or some non-wisdoms, I didn't really give you guys any content to maybe really solidify. For those who didn't see the last podcast, I've been in the wealth management, wealth protection, they call it wealth planning industry somewhat, for most of my life. Originally, I'm a Gator from the University of Florida. They got an accounting degree and went to work all that area with the big eights firms and everything. But that I then eventually ended up working in the trust area specifically for a bank and leading a trust area for all their services throughout all Latin America. So I've worked a lot with clients outside the U.S., very much with clients inside the U.S. Currently, I'm head of private wealth for the Americas for a global company, which I'd rather not mention right now because I'm not really promoting them at this moment. This is something that I do just as a consulting for private clients, the wealth type consulting. But to be very clear, what I don't do is investment management. Okay, so this is going to end up, a lot of this topic is going to be a lot about crypto. And crypto, like other investments or whatever, I mean, I can tell you Amazon is good now. And I wish I could have told you Bitcoin was going to be what it was going to be. So I can't, I don't give investment advice. I always work more in the area of asset protection. Okay, I set up structures to protect the assets against debtor claims, against being sued. If you get a divorce, let's see, if you die, that's a big one. You want to make sure, I mean, everybody, even if they don't have kids and they're young in life or whatever, they've got somebody they'd rather give the money to than the government. So it's something you procrastinate because if somebody tells you can make a lot of money on this quick investment, you'll stop everything to go do that. But if somebody tells you, hey, just in case you die, you really should, take a little bit of time to organize your shit. You usually say, yeah, I'll get to it, but I don't plan on dying today, unless nobody does. So it's just something that should be done. And again, it's not just about dying. It's about setting up structures in life to minimize taxes, and, not to evade taxes, to minimize, to maximize privacy, to maximize protection, to get business arrangements with partners. If you're doing crypto with a bunch of buddies and you have a little, pool of guys together, formalize it. Formalize it to the point where if it ever gets to be something that's worth a lot of money, that you guys you have nothing to fight about. Everything was settled before. So, this is the area that I tend to specialize in. And again, the kind of the cornerstone of all that, the structure that protects clients generally in the greatest regard is a trust. Okay. And for those of people that don't know what a trust is, probably most of you have heard about it. Kim Kardashian, I'm sure she had a trust before she became one of the Kardashians. What was her blonde friend? That was
Paris Hilton.
Paris Hilton, the ultimate trust fund baby. Okay, that's one that, it's from the Hilton family. So you can imagine how much money is there. And I'm sure there was so much money put in there to protect her from from hurting herself despite her best tries. So, I mean, that's at the large level. There's medium-sized trusts. If you've got $1 million in assets, you should have a trust. Sometimes, 50,000, 100,000, or the potential of a business that right now is worth something but could be worth much more, is worth setting it up and just to make sure that it's protected, and if anything happens to you, it goes on. So what is a trust, basically, for those that don't know? It's basically a contract, okay? It's a form of ownership. In some ways, it's the best form of ownership because some trusts, not all, you have to be very, this is crafting. This isn't one size fits all. There is a certain size for a certain non-sophisticated type of client that, yes, for that client, one size fits all. The more that client diversifies into real estate, into certain investments, his business takes off, multiple properties, whatever, crypto assets. As much as it grows there, the more sophistication will mean to be put into the trust for the protection and for passing it on later. Okay, but a trust, again, is a separate entity in essence, okay, set up by a person they call the settlor or the grantor, okay, transferring title to a fiduciary, a trustee. Okay, the trustee has fiduciary duty. He is supposed to act for the benefit of the settlor and as per the benefit's wishes. Think of somebody that does everything you say it's supposed to do, as long as you don't tell it to do something that's illegal. And then you have the beneficiaries. The person setting it up, the trust during his life, can be the primary beneficiary, along with his wife, along with whoever he wants. Usually it's the person setting it up. And after his life, the beneficiary, will be his children or however he wants to leave it up. It's very good in this country. That's one great thing about the American tax code. Okay, and it does signify freedom. In this country, you don't have what they call forced heirship. Other countries, many Latin American countries, you've got to give 50% to your wife. You've got to give X percent to your kids. And then they always leave over a 10, 15%. You can do whatever the hell you want with it. But in the U.S., technically, you can leave your dog 100% of the money. Okay. And I always find those situations very humorful. But anyway, so you do have that flexibility. You have it when you create a will, and you have it when you do a trust. So very important. You want to trust your fiduciary, your trustee. Usually you do trust, if it's a professional trustee, that they have a legal obligation to abide by the trust rules, to basically, carry out your wishes, okay? Beneficiaries, this can be altered and changed as much as you want during your life, unless you do a contract that's irrevocable, and then you can't change the conditions or anything. That's very specialized doing it. That's only when you have so much money that some of it's not going to get to your grandchildren or whatever. Then maybe you would do something like that. But most people don't have that kind of situation. So most people have a living revocable trust. Companies like mine sell a fiduciary, or my company I work for, sell fiduciary administration services. So they'll act as trustee, okay? For a certain level of client, that may be worth paying. It really depends on the sophistication, how independent you want to get of the money. Most people, the people in my business don't say this out loud, but I do. There are people that are at a certain level that they can, and especially in the USA, you can do a trust, name yourself as a trustee. So basically you can control everything. You have to try to put two hats on. Well, you have to open separate accounts here when you're acting as trustee for the organization, but you're basically writing your authorization letter, taking out money to yourself. You're running the whole thing. So you can do that and save annual trustee fees, which could range anywhere from $5,000 to $50,000 or more, depending on the amount of money that's in the trust and that the trustee would be responsible for. But at the end of the day, as in Florida, you could do a trust that you're set up yourself as a trustee, put your beneficiaries just in case somebody dies. If you're going to do that, you have to name a successor trustee. If you die, you can't keep being the trustee, obviously. So at that point, perhaps you could name somebody that you trust, a brother, somebody. Again, depends how complicated everything is. If you think your brother could handle transferring a couple properties to the beneficiaries, fine. If you think your brother could handle a lot of millions of dollars in crypto assets, maybe not so fine. Okay, maybe you trust them enough to at least find the right person to then manage it, sell it, whatever. If not, you write into the trust who you want to do that. Okay, so you can control a lot of things of what happens, after you're not here anymore. But let's talk about when you're here, though. Okay, and you're setting up a trust. Maybe some of you, and I can help in this regard. I don't want to act like I don't know if I'm selling anything yet or not, because I will take on clients on an individual basis if I have a conversation with you and I really think this would be a consulting fee. So if I feel like I could consult you and get you the end result that you need, then we could work something out. But if you want, if you guys, anybody out there, you want to take some notes, I'm not going to put up, like I said, I'm not selling anything, so I didn't make a PowerPoint presentation. I'm a busy guy. Hold on a second here.
Oh yeah, no, it's okay. Like this part, we're gonna cut out.
That's okay. Yeah. I did get ready.
You're not going to.
So this is the content I owed you after the drunken stupor of a podcast last Friday.
Oh no, I liked it. I'm like my girlfriend. We watching it. It was she laughed, and to me it was good stuff. And I mean, we got a lot of good feedback. So and now it's
well.
What'd you say? I'm sorry.
No, that's great. I'm glad. I love John McAfee. When I said I had the John McAfee vibe, I was down deep. It made me laugh too. Anyway, the tax issues. What's going on with taxes? Okay, crypto. Let's get away from trust for a second, and just talk about what's going on in the crypto world with taxes. I may not be the most up to date with everybody. I pretty much know the important ones. They're still trying to work on a lot of regulations. It's been pretty much determined that Bitcoin is a property. It's funny because it's something I've seen that's very few things are bipartisan when it comes to our Congress. We're a very divided nation, and there's no secrecy about that. With crypto, we seem to be, both ends of the aisle are online with getting in this because, and this is just my opinion. YouTube, please don't take us off. I think, for whatever reason, the governments want a digital currency. Okay. We're going to have our own digital currency, but that's going to be something pegged to the dollar. Whether they put it on a, a social conduct score or whatever, who the hell knows? Okay, those are conspiracies. We hope not. Okay, but they need to have that technology. So the people that are doing that technology and the blockchain and everything are the ones that are there now. So they need these people. They just can't have the rest of the world going on this, going in this direction, and we're not. I mean, it's like the metaverse. Sooner or later, it's going to get there. If everybody eventually got online and figured out you didn't have to watch TV, you could watch YouTube. And why do I need a TV anymore? At some point, somebody's going to go, why do I need to go to YouTube when I can just go to the actual place or be in a more immersive kind of environment? So I think all this is going to go forward. Okay. And I say that because I'm very curious to see what comes out of Congress. It's interesting because there's a lot of Bitcoin maximists right now. They're the ones sitting down with these governors trying to figure all this stuff out. And that makes me think that maybe stuff like Ethereum and the other ones that have more utility but aren't just based so much as a store of value, it's very murky. It's very murky. They may get more security type treatment. At the end of the day, it's not going to be great as far as decentralized as we would like it to be, but it's impossible to be totally decentralized because at one point or the other, you depend on, presenting, turning these crypto assets into stuff that you can use to buy, to live, to do everything. So you have to deal with governments. You have to deal with places that are regulated. You have to be as up to the law as possible. And if the law allows certain little loopholes where you can have a little more privacy than you wouldn't have had otherwise, it's worth taking advantage. And it's really interesting to look for. I look, as more regulations come on board, I hope to find more. I look for them all the time. So again, going back to taxes, what they've done so far that's concrete. They talked about, basically convertible virtual currency. Can it convert to, can it be used as dollars? They generally discuss that this is going to be taxed as property. That is key because, that's a capital gain tax, which is still currently at 20%. The tax rates, in different countries, almost always the income tax rate is higher. So the fact that they did that will be very good as far as holding the actual, any virtual asset, basically. Let's see. This is something that I thought, the crypto assets created in a hard fork, okay? And if I'm talking a little bit like a novice of crypto, I'm very excited about this space. But I realized I missed Bitcoin at the beginning, and I'm in the later stages of this thing. But I'm not totally late, I think, in the long term. So a lot of the stuff, from an investor point of view, I'm very boring. I'm, the ones I really think will be here in 10 years. But again, this isn't to talk about investments. Back to the actual tax laws. If you get a hard fork transferred into a wallet, the holders, it doesn't constitute income unless you have access to the wealth. So a crypto asset from a hard fork actually that got airdropped, okay, to you, to the wallet, you do control it. So at that point, even if you didn't want it, they will tax you on it, okay? And that would be very interesting. I think they would tax that as actual income. So again, you got to see these things, they put these regulations out there, somebody takes it to court, then they further interpret it. Sometimes the evolution of law works because they further interpret what they wrote at the beginning. They didn't know what the fuck they were talking about. Sorry to curse. That's not going to change from last Friday. Coinbase in 2016, Big Brother, the government asked for 13,000 accounts. Anything that had transactions over 20,000. Kraken right now has a summons pending. On your tax return now, you have a line that says, at any time, I think they started in 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Okay, that's what they call when the government calls a fishing expedition. Okay, when they want to come get you, they think they have evidence, you'll have a summons, you'll have to go to court, you'll have something directly that affects you. That becomes important when you're trying to protect assets. Or in certain cases, the government has the ability here to just say, okay, let's throw it out there. It's just the way a lot of people get audited based on a random thing of so many people, and you won the wrong lottery ticket. You have to go in there. So what happens is when you're doing a trust, okay, which has been around for hundreds of years, but now you're doing a crypto trust, okay, or something that's going to have crypto assets, you have to think about a few things. You have to think about, okay, the jurisdiction I'm in, how friendly is it to crypto? Okay, we have all heard that in this country, in Europe over here, and I have to look at my notes, but I think it's, France. France is a good example. France has no tax at all for the capital gain, all right, at all. But they have all these specialty taxes, which they don't publicize, okay? And it's actually rated as one of the worst jurisdictions for crypto. Okay, I don't give financial advice, and this is just my opinion based on a few things I read, so I don't know for sure. The reason they say it is because they have a lot of hidden taxes, and my understanding of France is that it's very much a socialist, very high tax area, extremely high tax. So they have a lot of hidden taxes in there. Apparently they have some very, very tough taxes for miners, so you won't find a lot of crypto miners in France. Now, again, this is talking crypto world or whatever. Let's, bring it back to trust. You want to find a trustee. Remember, before I talked, it's not just about where you put it, but who's going to be that person that holds the trust, okay? You want a fiduciary that's crypto friendly. You want somebody you trust. As I mentioned before, it could be your brother. If your brother doesn't know the crypto smart guy, okay, or crypto friendly person that's going to treat your crypto the way it should be treated if you were still alive, maybe not sold right now, you wait till Bitcoin hit because nobody needs the money right away. That's the person that you need as a fiduciary. So the way trusts are structured these days, there's some basic things you got to do to trust because most fiduciaries wouldn't know how to handle it. I mean, sometimes to make a fiduciary calm down, they have something called the prudent man rule, all right, which means, the fiduciary is supposed to act the way the settler would have wanted him to act. Well, what if that's not clear? He's got to make an investment. Well, he can't just go take some crazy risks. He's got to do what a prudent man would do to protect his wealth. Okay, so for somebody right now, there are many people in the world that wouldn't think crypto is prudent. And you don't want your money, set up in a regular trust. It is, something happen. You're then having somebody deal with crypto assets that has no idea what they're doing. So more than ever, whoever is that trustee right now, okay, needs to be somebody that understands crypto. 1 second.
You're fine.
Okay, custodial considerations. You guys probably know, you know more than me about this. I know the basics. You got your private and your public keys. Okay. The public key allows the assets to be securely received. The private key unlocks everything. Well, you can have a lock. Think of it as two. You have the lock receive and the lock send, the public key and the private key. Now, what do you do with these things? The private keys are important, okay, very important. But the private key unlocks the value in the blockchain. So if you lose or you get that private key stolen, we all know it's gone. Okay, now what do you do? I mean, you've got something that's reported in the trust, shown in the trust. They list all the assets in the trust at the beginning, or if they're added or subtracted. All right, you've got something here that all of a sudden has disappeared. That trustee could have some liability. So now you're putting someone, and again, if you're your own trustee, you're putting it on yourself, but you're putting somebody to be responsible so that key is never lost, so that money is never, for whatever reason, is as safe as possible. You're not depending on that third party to keep it safe. So when you use a pen and a paper, you document your private keys. Keep it current, store it in a very safe place. A lot of people put it in a safety deposit box. It's not a bad idea. But again, the safety deposit box, and who has the access to the safety deposit box? Because if you've got your private number written in a box and you pass away, or somebody else gets a hold of that box, opens it up, it's gone again. So what they do many times is that what's called a multi-sig, okay? A multi-sig is basically a signature scheme with multiple users, okay? You'll usually have, how can I put it? It adds complexity, okay, but definitely it adds security, okay? It's basically somebody initiating and somebody confirming, and you can have 2, 3, 4 people. This is where you'd be good sometimes to have an independent trustee as being one of those people that's responsible. So if you've got 3 or 4 family members, but you don't want them to fight among themselves, you put another one in there to unlock, the whole chain. Things to think about. Again, the more complex your needs are, the more you need to put this in. But if you've got crypto assets and you're not thinking about this, then, if you are setting up a trust, you're not doing yourself any favors. So, can you do a trust in the U.S.? Can you do it offshore? I've done 80% of trusts I've ever done have been offshore. The major reason for that is probably because 80% of my clients have been from offshore, mostly from Latin America. And interestingly enough, a lot of more of them are doing them here in the U.S. When I say offshore, I mean offshore of the U.S. What do they call these? They love to call them tax havens. You've heard of the Panama Papers and this and the other. It's so interesting that nobody there has been charged because that money isn't. How can you say it? It's not supposed to be illegal. There's privacy, okay? And if it shocks certain people that they found, let's put it this way. If Fidel Castro's son is a billionaire in Cuba, I'm Cuban, so this is true to my soul, and Cuba's a very poor country, then, I mean, nobody's accused him of doing anything illegal, but somebody, yeah, they found out where his piggy bank was. So all those kind of situations, you know, that's the bad side, supposedly the ugly side, the side that the press likes to, you know, make a story out of. You know, that's the Will Smith slapping this comedian or whatever, the drama, oh, this guy and the other. But everybody knows that Putin and these out Saudi kings and everything have millions of money. But let's bring it back to normal people, and a few people that may have had a few $1 million or whatever, or looking to have quite a few $1 million. I know a million isn't what it used to be, but back to the normal, you know, hardworking, successful individual. If he is a U.S. citizen, okay, and he wants to take his trust offshore, and I mentioned this in the last podcast, I think it was one of the few bits of good wisdom that I had. A lot of people don't realize we're on the honor system. You know, a waitress is working at a bar, and she gets a 1099 with her salary. She's supposed to report her tips. Maybe the owner of the place is keeping track of the tips. Maybe she's putting a few in her pocket and not telling anybody. But at the end of the day, whatever she's doing, she's on the honor system. Now, she's not going to grab as much attention as somebody that, you know, is buying and selling hundreds of thousands of dollars of Ethereum, you know, on a private wallet or anything. Of course not. But the rules are the same. There's an honor system. And one of the best things you can do is whatever your direction you're going in crypto is keep good records. Okay? Keep very good personal records, because again, we have to legitimize all this. We're in the process right now of tying this into the real world, into the crypto world, the government seeing how they're going to regulate, how they're going to tax. So when they make these decisions, the more information that you have on hand, that you've accumulated, that you can back up, Excel spreadsheet, bought it this day, sold it this day, whatever. That kind of information is always going to be useful for you, because the government will say you sold 100,000 worth of Bitcoin, okay, 20% capital gain tax. You go, wait a second, I bought the damn thing for 120, it's a loss. Okay, there's a benefit there, but if you don't have the backup, all right, then you can't even argue with them. They win every time. So always, you know, honor system, you keep good track of your records. Can you go offshore? Yeah. Okay, but there's another question on the 1040, another phishing, that tells you, are you a beneficiary, or do you own any assets, interests in bank accounts, businesses offshore? You don't have to even tell them how much you have. U.S. is pretty good that way. You just got to tell them you've got it. If they want to ask some questions later, that's another thing. Okay, but for now, you didn't tell them you didn't have it. Okay, you don't have to give an annual inventory of exactly what you have. But if you don't tell them you had it offshore, then it, you know, you could penalties. They basically almost take the whole thing from you. Okay, it's 50% penalty. It gets really ugly. So you can have it offshore. It's not at all a crime. Okay, many people do it for asset protection. Okay, and what is asset protection? Imagine if having it in a trust. You know, I used to tell my clients sometimes that trust is great because it's your money when you need it, and it's not your money when it's not convenient to you. Okay, so, you know, in the perfect world, you could set up a lot of things, put them in trust, and then people come sue you, and they can't get to the assets because it's in the trust. That can work. That can work in a lot of jurisdictions. Okay. Key is, don't already know that you're defrauding someone, and right before you defraud, you set up the trust solely for the purpose of defrauding that particular person, or that, you know, you knew you were going to go bankrupt within a couple of months. Or it can get very cloudy. Okay, but don't do it. You know, don't set up the trust after you're already in trouble. Set up the trust before you have any trouble, even if you don't foresee any trouble, and then that could protect you. Different jurisdictions, some are better than others in asset protection. So without thinking, before thinking too much about asset protection, you want to go to a crypto-friendly jurisdiction, okay? And you also want to go to a jurisdiction with the least amount of taxes as possible, okay? I'm very familiar with this part of the world. I'm in Miami. I work a lot with the Bahamas. I work a lot with the BVI, Cayman. all three are very open to crypto, okay, especially BVI and Cayman. I think neither one has written too much regulation, but they've got people on the ground there working, and they want to be able to hold structures for it. Another complication, and hopefully the whole industry there will tag along with this, is that the banking, there are many banks that don't want to hold an account that has crypto. Interestingly enough, I found out the other day the bank that's leading the charge when it comes to crypto on a kind of a global basis is Goldman Sachs. Those son of a bitches. But just because it's Goldman Sachs is playing in that game, a lot of the other ones aren't. Many of them are just now getting J.P. Morgan. Fidelity wants to do get involved in crypto. But for the common person to go somewhere and open an account, all right, and open a trust, and the trustee now, a bank account that is holding an investment account for a trustee. If it includes crypto, good luck finding a bank and getting something established the way it needs to be done. That's what I do, okay? But I know, because I'm in the business, how strange it could be for somebody that's not directly in this. They really wouldn't know where to start. I mentioned about as far as asset protection, Bahamas is very good. All three of those are good for asset protection. Asset protection has different factors you want to look at, all right? And I'll tell you the one actually that checks all the boxes at the end. You want to look for a jurisdiction that has bankruptcy protection. If you go bankrupt, the money's in the trust, it's protected. You want one that bar, very few jurisdictions bar foreign judgment. Like, the U.S. says here that you committed a crime and you're judged negatively. All right, they can go to Switzerland, okay, even in Switzerland, and say, look, there's a judgment against you. We have, give us access or freeze this account. Okay, if there's a law, actually, if the same law is applicable in Switzerland, okay? And a lot of these islands, or not a lot, only one or two, they say, no, I don't care. You have to come to a court here on the island, all right, and try him for the same thing and win the case. So imagine the expense of whoever's suing you or trying to collect a debt of actually having to fly out. And I'll tell you the island. It's called the Cook Islands, all right? These guys are in the middle of the freaking South Pacific. Just to get there would be a pain in the ass. But they are very, very legitimate. They've got, one of the factors you look at is how long, they call it like a statute, how long can you set up a trust for? Let's say I set up a trust for now. And they were, like I said, I didn't set it up for the reason of this particular judgment that was coming against me. Okay, but the judgment comes a month later. Well, that's pretty close. So a lot of countries will say 3, 4, 5 years before, like a space where once it's there that long, then after that, forget it. Don't even come here and ask for it because we're not even going to listen to you. Okay, Bahamas is very good. Bahamas is 2 years. Here in the Caribbean, the Bahamas is the best for that. Okay, the Cook Islands is 1 year. Okay, so 1 year you got to go all the way out to the South Pacific, and they basically, they just don't want to hear it most of the time. So it's a very, very good jurisdiction. Nobody talks about it a lot. That's probably why it's so good for asset protection. Another one that's worth mentioning is Nevis. I have a personal favorite for Nevis because, and this is not a politically correct thing, but they kind of tell sometimes all the global institutions that are all trying to pass all these laws, always because, they're trying to catch drug trafficking or, money laundering or terrorist activity, all these, just to like infringe on your privacy and so forth. They are one island, the island of Nevis. I give it out to you. They'll give the middle finger to Big Brother often, and not in an ugly way. They just go, no, that's a little too much, man. Okay, give me a break. But there's a little island. I think it has a little volcano in the middle. I don't know. They're like North Korea. They just leave them alone. Let me see what other notes I had I wanted to share with you guys. No, again, I think it's worthwhile to think about offshore jurisdictions, I think, for this stuff. I really do. It's just a little, a lot of people want how can I say it? I can't talk just to the hardcore guy because the hardcore is like our super argument for decentralization. And you get into all those, there's so many people in that space that are talking shit that I can't possibly fathom what's going to go, what's going to happen. But I can talk to, that we all, I think, have a spirit of there is a middleman. Is the middleman corrupt or not? We want to be decentralized. Why do we need the middleman? I can do it myself. What the government's telling me, oh no, I can't do it because the government's trying to protect me from myself now. Okay. A lot of us have problems with that. Okay. So we unfortunately have to abide by a government. We do get all the benefits of a government also. So, we're all civilized people. We have to live under this type of situation. But at the same time, you want to have as much control as you possibly can. Okay? So the worse the situation gets, the more options you have available to you at life. So the idea of setting up a trust specifically just for crypto offshore on one of the islands, okay, gives you just a little extra layer, I think, of protection overall, a little more sense of anonymity. I think it's worth the money. When I say it's worth the money, unlike the U.S., where I said you could be your own trustee and save yourself a lot of money, in most of these jurisdictions, you have to be a licensed trustee. Okay, you could make a one-time investment that would probably be in the 10 to 15,000 range to set up your own private trust company. Okay, where you actually buy a license as a trustee. Then you can run your own trust, and you won't pay a lot annually after that, but it's a one-time hit. That's one way to do it and not having to be paying the annual trustee fee. Another way, there's a few other ways. God bless Nevis. Nevis has laws where you can set up a simple LLC, okay? And you don't have to have the licenses there, and you can basically control it the same way you control an LLC here that people have hundreds of LLCs for. And they do give certain asset protections that are very close and rival those of a trust. So, again, I don't want to take up too much more of your time, but I think I owed you guys a little more content. I want to keep emphasizing and stressing that this is the most boring part, okay? It's a lot more fun to find what is the interesting coin, what is the great investment out there. But this is the part that we're all responsible for doing. If we want to protect our wealth, protect our family, and be smart. You don't want to be the dumbass that you could have done something to protect yourself or to protect your family, and you didn't even think of it, or you said, that would never happen. If anybody would like at any time to speak with me, and you have a case that you think, if I could answer a quick question, I'd be happy to do that. If you want, leave comments in the comments section. I can do that way for now. I've got my time pretty much locked up for a lot of things, but I'm a crypto enthusiast, and I'd like to help out all the young people, and you guys maybe can help me out and tell me what I can invest in, because I've got I got an amount of money I'm willing to gamble that I think it's a good gamble. So I don't know if you have any questions, Zeph?
You really covered a lot of it. I really like what you were saying about kind of being pragmatic and realistic about decentralization. Some of these guys, they're like, oh no, not your keys, not your crypto.
Thank you for listening to the Neru Lending Podcast. We hope you enjoyed. Be safe and have a great day.
Build business credit today for free with our free business credit, building software, and mobile app at nerilendinginc.com. Also, are you interested in adding another revenue source to your business? Apply to join our white label business credit partner program today. You can contact us at info@nerilendinginc.com or give us a call at 888-50-88298. Interested in owning your own custom metaverse? Start your new business today and offer business services such as website design, toll-free numbers, and much more. Use our next level blockchain technology in your metaverse to offer NFT, business crypto, virtual concerts, advertising space to advertisers, play-to-earn games, and virtual shopping experience. Join Kylie Jenner, Mark Cuban, and many more with your own custom metaverse today. Contact info@nerilendinginc.com or give us a call at 888-50-88298.